Welcome everybody to another edition of ATL Alts. This is your host, Andre Sindate. I am joined today by Marissa Kim, Head of Asset Management at Abra Capital Management. Welcome to ATL Alts, Marissa.
Thank you. Very happy to be here.
I know that we're going to spend the next 45 or 50 minutes talking about digital assets and crypto, but I want to take a minute and talk a little bit about your background. So I'm just going to read a little bit of your bio and your firm's background. So Abra Capital Management, ACM, is an SEC registered investment advisor and subsidiary of Abra, which is a global platform for digital asset prime services and wealth management. In April of 2024, just recently, the firm announced the launch of Abra Private, which you lead, and it provides high net worth investors, financial advisors, trusts, and family offices, among others, with a comprehensive suite of digital asset and wealth management solutions, all of which are powered by your firm's expertise in DeFi, which is a very big differentiator in the space and of your firm. So I'd love for you to talk about some of those specific services, which include trading and investing, the ability to earn yield, borrowing for those that already own digital assets and want to put that asset up as collateral, and then also some very unique customized investment strategies, which are offered through very unique SMA models and approaches, very unique to this industry and very pertinent given some of the challenges the industry's faced with custody, et cetera. Before we jump into all of that and some of the very exciting announcements that you're a big part of, I'd love for you to give our guests, which are many financial advisors, RIAs, and family offices who are trying to get educated on alternatives and non-traditional strategies. Would you give them a little bit about your professional background, which is just super impressive and quite deep in the space?
Absolutely. So I actually started my career as a lawyer. So I was at Skadden Arps, which is one of the biggest firms in the world, and I was in their investment management practice. BlackRock was actually one of our largest clients. So I worked on a bunch of their funds, advised them on all sorts of Advisors Act and Investment Company Act and all sort of securities regulations. So I think it was a really good background, actually. I now found that even though I'm not practicing now, I use a lot of the knowledge that I gained in those years and apply it kind of to this Web3 space. And then I did that for a couple of years and then kind of wanted to do something different. I really wanted to actually be a part of kind of building something where, as you know, being a lawyer is very much an advisory capacity. So,
Sure.
It's a very valuable role, but I didn't feel like I was actually doing, creating something of value and putting it out into the world. So I moved out to San Francisco from New York and joined a tech company, which I was more in a business role at that point. So kind of shifted from being in the legal role into a business role, which I really liked for those reasons. I mean, just kind of being able to put a product out into market and feeling like you're putting something out into the world was very appealing to me. And that was in kind of, call it 2015, 16, when crypto was really, it was really just Bitcoin at that point. Ethereum was just kind of coming onto the stage, but nobody was really sure exactly kind of what was going to happen in the industry and how it was going to evolve. But a lot of the early community that I came into contact with in the Bay Area, I was very excited about kind of what they were talking about. And I did see the potential for kind of disruption of the financial industry. And I don't think any of us were really expecting it to happen this quickly or, expecting it to evolve as it did. But I just really wanted to get involved full time. So I started advising companies. So that was around kind of 2017-ish. And a lot of them, I was kind of just providing just some strategy around regulation because that was really the background that I had. And at the time, a lot of lawyers in the big firms really they weren't super deep into the crypto space. It was way too new. So a lot of people were unclear as to how to kind of navigate this system and from a regulatory perspective. And a lot of those companies were paying me in Bitcoin and Ethereum at that time. So instead of cash. So it was kind of a little bit by accident that I ended up taking it as a full-time role. And I actually met Bill, who's the Abra founder, in around 2017 at an event called Peer Summit, which is kind of just like an unconference for the industry, which was at that time very, very small. He was just starting to build Abra, actually. So he had just launched the retail app, which was kind of the first product that Abra launched. So at that point, I was really interested in what he was doing. And then a couple of years later, he brought me in to kind of build out this part of the business.
Yeah. Well,
Yeah.
that's fascinating. I mean, you
Yeah.
dropped some nuggets there that
Yeah.
that I'd love to go back and talk about,
Yeah.
just the idea of being paid in Bitcoin. We're
Mhm.
coming up, I think we just this week had the anniversary of the infamous, now famous story of, the individual who purchased the 2 pizzas paid in Bitcoin. And I think the latest price of Bitcoin, those 10,000 Bitcoin made that trade about a $700 million trade for a couple of pizzas. So it's just fascinating when you talk to people who are at the early stages. I really refer to them as pioneers because they truly were willing to go out west in this case, and really, like the internet, right? In the mid to late 90s, you didn't really know where it was going. And I've heard often people refer to crypto, Web3, digital assets as it's messy right now. It's unclear a lot of times. I think it's coming more into view each and every year. I think the events of the last 18 to 24 months, probably pushed out a lot of the bad actors and some of the bad behavior. And I think that is just a sign overall. This is my op-ed of a maturing industry. And I think it sets up really interestingly to have this conversation with the backdrop that more and more advisors, when you talk about the financial advisor, the intermediary, to the high net worth, the ultra high net worth marketplace, and the family offices, I think they're clamoring to understand how to access digital assets, crypto, Web3, but I think they also want to do it in a sensible, smart, institutional like way, to take nothing away from the retail investor who's doing it themselves, with a brokerage account or Robinhood account for that matter. So this is a really timely conversation. So what was it that attracted you to joining Abra? You have a background in asset management. You started a couple of firms yourself prior to joining the firm, and you're taking on a really big challenge, but also opportunity in the wealth management, private wealth space. So I'm curious, like professionally, what was it that got you interested in joining this particular organization?
Yeah, I mean, I think I was really, as I mentioned, I'd followed Abra's journey from the time they initially kind of launched to the world, and really was impressed with kind of the innovation. There's several products which are not kind of what the Abra app ultimately ended up looking like, but there was a lot of early innovation that Bill did, that some of them were not possible for regulatory reasons or just because they were too difficult. You have to remember that, at that time in 2016 and 2017, there wasn't a lot of infrastructure. So forget about, investing infrastructure. There also isn't a lot of infrastructure for companies that are building in the space. So some things are possible and some things are not. But I think just the culture of kind of really innovating and, putting the customer first, trying to figure out what customers needed and wanted, and just iterating on that, and then just kind of a native Web3 approach. I mean, that's one thing that I think that does set us apart from some other firms, and it's not necessarily a positive or negative. It's just really core to our DNA, is that Bill, who's our founder and CEO, he's been in the space longer than anybody. He gave a TED talk in, I think it was 2010.
Yeah.
Or maybe
10 or 12. Yeah.
2012.
First one on record about
very,
Bitcoin.
very early. Yeah.
Yeah.
So
yeah.
I think Bitcoin at that point was under $10. So he's really been fascinated with Bitcoin and this space as a way to kind of solve like a cross-border payments issue and, those types of solutions. So I think really what attracted me is just kind of his commitment to innovating in the space. And then also just coming on board to really, you mentioned that it's still very early and there's still not a lot of great ways to get exposure to this space. So it feels like each bull cycle, there's kind of a wave of activity and a lot of excitement from, from kind of mass market, I'll call it. It's on CNBC every day, but then kind of the innovation stops as soon as there's a bear market and everyone kind of goes away and stops paying attention to it. So I think that's the reason why, we are just now getting to a place where I feel like there's options for people. As we mentioned, the ETFs, there's ways to get that indirect exposure. There's now ways to get direct exposure. There's yield, there's borrowing. There's a lot of different ways to get exposure to this asset class. So I was excited about kind of building that out at Abra.
Yeah. Yeah. I mean, and you have the background. You talked about your legal training and background in practicing, providing that advice to builders, to operators, and now being on the other side, I'm sure you have an appreciation for, what it is to, manage and run a team, a P&L, start thinking about product market fit, start thinking about how do we differentiate and stand out from what is increasingly, becoming a more and more institutionalized space. You mentioned BlackRock earlier. It is amazing how quickly we saw registered products in the form of ETFs come online very quickly. And that is one advisor's or another, that may be their point of entry to start the call it crypto journey, the crypto investing journey, or the digital asset investing journey. But much like equities and other strategies, I think that there's going to personally be a lot of innovation, and there's going to be a lot of advisors and family offices and trusts that start to say, what other ways can I give my clients exposure? And that leads me to sort of, just a question. April of 2024, very recently, Abra announced the formation of Abra Private. Tell us what that is, what's behind that initiative.
Yeah, I mean, it's our wealth management platform. So we were previously managing a lot of assets through our retail app, and a lot of the, our top clients were managing millions on, through a mobile app, which is, it's okay. But I think in terms of like how they like to invest and manage their money, a lot of times they have their own wealth managers who want to have access, to their statements. They want to see what's going on. They want to pull it as part of their larger portfolio. They want to invest through a trust. All of these things we couldn't do through the app. And that really was like when, we had millions of users all over the world. We still do. But in terms of like where we saw kind of our best product market fit, it was really ultra high net worth, users of crypto that a lot of them are already, kind of dabbling on their own. So a lot of these people were not necessarily converting from, I've never bought Bitcoin before. A lot of them have already bought Bitcoin on Coinbase, and they were using our app to earn yield, to borrow, and do kind of these other things. So it was kind of a natural evolution where we wanted to go where our clients were and meet them where they're used to managing their wealth. And as this wealth grows, a lot of it, some of them started their crypto holdings were very small relative to the rest of their net worth. And as the price has appreciated, it's become a larger and larger piece of their wealth. So it's really just a natural evolution, I think. And I would also say that I think it's a much better business model for a lot of our clients when you look at what happened with, BlockFi and Celsius and a lot of these companies that were, bankrupt, and they were essentially, their clients' crypto was basically a liability on their balance sheet, which is a very different legal model than we're using. And I just think it's better, it's really better for our clients.
Yeah. I mean, the idea that you have folks around the world who were investing, call it, 7-10 years ago, they've seen appreciation, probably considerable appreciation. And given the nature of the asset class, there's such a proliferation of not only information, but just innovation about what you can do with those assets. And not only in terms of diversifying, and, we're seeing this year, for example, like just this run up in meme coin prices, for example, but the idea of things like staking and things like borrowing and collateral and all the other services. And so as you're describing the idea of more of a private wealth experience, if I'm getting that from my private wealth advisor in all these other traditional and alternative strategies, and then I looked at my crypto and I say, I have an app, I would think that starts to say, okay, where can I go get that customer experience, which truly does start to differentiate why an advisor works with a particular, firm, whether it's custody, services for trust, et cetera, and the importance of reporting, integrating all the information on a statement. People want to see what are my assets doing, and and people want something simple. So what, when you sort of outlined the services that you wanted to get involved in, and you said met the clients where they were, I know that through Abra, you can trade, you can invest, you can borrow, you guys are offering customized strategies. When you think about that menu of capabilities, when you're thinking about a sophisticated RIA or a sophisticated family office, how does that conversation start? How do you begin to build that relationship? If if they want to do more, what does that look like?
Yeah. So I think, you asked me that question in 6 months, it'll probably be different from today.
Yeah.
So
Yeah.
today we have a lot of clients that, as I mentioned, these are clients we've worked with for several years. They were kind of brought over from this other model. And we do have a lot of new, I would say like the last couple months we have, because there's been press, we've had a lot of new people that are already in crypto, but new to Abra. Those people, obviously, you're not trying to necessarily sell on the idea of crypto, because a lot of them already have Bitcoin and Ethereum exposure, and they've, maybe bought their assets on Coinbase, but now they're thinking like, what can I do with these assets? I don't intend to sell them. They want to put them to work. And that's kind of, the beauty behind and kind of the best innovation in digital assets and in Web3 are kind of these, or DeFi, which is like a term that, some people understand what that means and some people don't, but it's really just kind of financial applications that are built on applications like Ethereum. So it's decentralized, there's no off switch, there's no counterparty risk, and all the transactions are basically executed via code. So we are offering a lot of our services that are offered directly through DeFi, which is, pretty unique. I think it does require education if you aren't familiar with that world, because, it's a different set of risk factors. There are a lot of exciting products. We constantly look at the space. We've been deploying assets in DeFi for 3 years. So we've seen a lot of different market conditions and kind of know how to react to them. But I think it has been an education process. These people that are, want to understand what that means to earn yield on Bitcoin or earn yield on Ethereum and what the risks are. So there's a lot of education that goes into it with our clients. And then I think the RIAs that are starting to learn about the space, we talk to them all the time, and they've been reaching out for years. So every bull market, the RIAs that are managing trillions in wealth of traditional assets usually come and start to do their education process on this industry. And I would say that it's definitely ramping up given the ETFs and kind of the success of the ETFs and legitimization of this asset class. There's more and more interest, and I think with them, it is more of an education and like a longer education process, because they're fiduciaries to their clients and they don't want to just make a, super quick decision. So that kind of B2B education, we do a lot of that. We've spent a lot of time with some very big RIAs and try to, answer their questions about the space, and also let them know about everything else that you can do that's not just, buy and hold, which is
that's right.
What they know. Yeah.
Yeah. And, one of the taglines of my show, in addition to the story behind the numbers, because I think it's really important for folks listening to find educational resources that are, objective and unbiased. And for me, one of the things that I've always tried to do is identify guests to bring on ATLs who can provide, a source of information, education, and inspiration. Right. Mm-hmm. So the educational piece is so critical when it comes to alternative investments and, investing writ large, but particularly when it talk about alternatives and you talk about non-traditional strategies, and then you say the word crypto, and it can be a polarizing term for advisors. However, when you look at the data, more and more folks own crypto. I think, estimates of 15 million, folks in the US own crypto. And so when you think about that, I was at a big investment conference. I think there was close to 70 or $80 billion in the room of advisors, and they didn't mention digital assets and crypto once. We talked about private credit, we talked about real estate, we talked about, hedge funds. And I kept thinking to myself, I wonder how many of these advisors have clients that have assets held away where they're not billing on the assets. They don't have any oversight. They don't have any idea what the client's doing with them. And they can't offer advice. They can't offer solutions. So when, the opportunity to bring you on and talk about this presented itself, I thought this would be a really good opportunity to provide some of that education, because an advisor who can then sit with the client or a prospect and say, look, you own $8 or $10 million worth of digital assets. There's things you could do with that don't involve us selling them. So that's where you come into play. And I'd love for you to talk about some of the different DeFi capabilities that you guys are experts in, because that is definitely an area of expertise at Abra. That when you sit with an advisor or a family office or a multifamily office, like what is the conversation when it comes to DeFi and here are some things you can do with your clients' assets where you can be the expert. We can support you, and it can be a source of growth for the RIA.
Yeah, absolutely. Yeah, I mean, I'll just comment because we recently spoke to a bunch of top RIAs, basically CEOs of the largest RIA firms, and they are all very interested in learning, but they, as I mentioned, it's kind of like a long process and they want to get comfortable. And we said to them, a lot of your clients probably do own crypto. They just may, they're doing it through Coinbase. They're not doing it through you. And they are going to come to you at some point and start to ask you. And if you don't want to go to them and proactively kind of tell them about these products, at least you want to have an answer for them so that you are educated and you can kind of provide a response. So I think that's been something that's very, it resonates a lot with them because they don't want to not have the answer if their clients have demand. And as you said, so I think Fidelity's done a bunch of surveys and there is very strong interest amongst, family offices, high net worth individuals. There's a lot of interest in crypto that I think people just aren't necessarily aware of. So I think there's a lot of interest. I think in terms of DeFi, I mean, it's always kind of, I think the best example of the benefits of DeFi really happened over the, 2022 when all of these companies were collapsing and everyone's crypto basically ended up in bankruptcy court and most of these people have not gotten their assets back. Right. Those companies were also using DeFi protocols to earn yield and to lend, to borrow and lend. Yep. And all of those DeFi protocols, none of them ended up with any bad debt because they're, it's automatic. It's in the code. So if you take out a loan and the LTV goes to a certain level, it's automatically liquidated and there's no bad debt. So I think we saw actually kind of the true promise of DeFi, and it's, it was illustrated through this, very negative set of events that happened in 2022. So I always kind of point that out, that's really how crypto and how these applications are intended to work. And that was a really great case study that we actually got kind of unintentionally of the benefits of centralized, financial, services versus decentralized. Mm-hmm. And, I think a lot of people are just trying to understand, they want to understand the risk factors. They want to understand the security. They want to understand, do hacks happen? Because we always hear about when hacks, it's very sensational. So that we always hear about this in the news. So the thing that I always say is, we are not looking to provide access to just any DeFi protocol. We have a risk team that goes in and looks, and the things that we look for are how long have they been around? So the largest lending protocols have been around for about 4 years. They've had a lot of, their quote unquote AUM, they call it TVL in the crypto space, but the amount of money that has been, the amount of loans that have been originated and the amount of collateral that it's managing is so high, that gives you kind of additional comfort that hopefully there's no bugs, there's no exploits, there's no kind of vulnerabilities in those protocols. And obviously it's a living, breathing protocol, so anything can happen at any time. But we always just look at our own risk management from that kind of perspective of how long has this been around? Who's the team? Who are the backers? How much AUM is there. So we really only offer access to those protocols that really have kind of passed that level of risk analysis for us.
Yeah, and I think when people were chasing yield, the last go around in 22, I think you saw a lot of investors, particularly high net worth investors, and I would speculate, I don't know factually, but I would speculate a lot of them, were attracted to these really ridiculous yields and the due diligence process. The things you just mentioned, who's behind this? How long have they been doing it? What's the venture capital, backing look like? Like how much of their own capital do they have invested? What are the risk protocols? All this operational due diligence as well was just not happening because the yields were so attractive, and investors, let's be real, like they're always looking for income. They're looking for passive income. So, so the space offers a lot of promise and potential, but you also brought up the point that, RIAs and family offices and multifamily offices, they're trying to grow their wealth, but they've made money. The last thing they want to do is lose it. Right. So they are looking for income plays. They are looking for growth. But at the same time, there's the whole notion of like, this is stay rich capital or a stay rich type of strategy. And so I want to ask you about, one thing that is very unique is the separate account approach
Mhm.
that y'all employ. And I say y'all because I'm from Georgia. I'm not,
Yeah.
I don't know if I'm allowed to because I wasn't born here, but Abra is known for this separate account strategy and the notion of not your keys, not your crypto, and separate accounts. They sort of do dovetail nicely together. And we
Yep.
did see a lot of capital, like you said, get trapped in bankruptcy over the last 2 or 3 years because the crypto was lent out. The
Yep.
crypto wasn't at the custodial platform or
Mhm.
it wasn't at the exchange. So talk about that as far as just why you're using the SMA strategy and how you do it.
Yeah, I mean, when we put together this platform and thought about how we wanted to architect it, there weren't a ton of resources on the custody side. There's several big custodians in the space. Their ability to access DeFi is non-existent right now. I think all of them told us, this is on our roadmap, but there's just no demand for it right now. So we looked at, what is our solution, and we really couldn't find one that was out there already. So we just decided to build it in-house. And the best way we wanted to do it is just build, these customer vaults that are where your assets are segregated from other clients and obviously from our balance sheet, and offer you the ability to deploy those assets directly into DeFi, into the smart contract. Which brings a level of comfort and transparency. You can actually go look on chain and see that your assets are there. Obviously, most people are not wanting to do that, and the whole reason they come to us is because they want to abstract away that complexity. So it's not to say that people are necessarily doing that, but I think in general this is the right direction to go, and we're continuing to innovate it with that kind of structure in mind. Like that's our goal. Today we can't do that for every client, for every strategy. It's not possible to do it in some of the strategies. But if you're directly staking, if you hold Solana, you want to earn yield, you want to basically stake your Solana, all of that's done through an individual vault, where you can go check and see that your assets are there. And so it's a very unique model, I think, and it's definitely the right model, we think.
Yeah. And so when you sit with, folks who are used to working with these blue chip, well-known, long-established trust companies and custody firms, and
Mhm.
they're entrusting the advisor and the team at that advisor firm to make portfolio recommendations, make decisions operationally, all the operations reporting, tax issues, market making. I mean, all of those things that come into play. Um, what are the services, if you will, when you think about SMAs in the context of equities? That's one of the benefits is you
Yeah.
get that. Are the RIAs also able to get all of those additional services as well through a relationship with Abra?
To some extent. I mean, we have a
Okay.
lot of questions. We'll definitely be able to provide advice on kind of the best ways to get exposure and help you do
Hmm.
that. And we run some of our own strategies, as I mentioned, and we provide access to select DeFi strategies that we aren't managing, but we're basically allowing you to deploy your assets into these
Into
strategies. We have a lot of questions around taxes, which is, we are not tax advisors. I
Sure.
always say that to people, but we do have a fair understanding from, we work with several very good law firms that have helped us understand how we can think about it. And, this is something that we can kind of pass on in terms of, here are the different ways you can think about it. And we provide all the reporting to file your taxes, obviously, as any RIA would. But the biggest question that people always have is it a taxable event when you earn yield, when you deploy your assets into DeFi and then you pull them out? Is that a taxable event? Obviously, the income that you're earning, usually that's treated as income, and we provide the 1099. So there's a lot of conversations around that. And obviously, the IRS has not given any guidance. I don't expect them to do that, anytime soon. I think this is a very complex area, as we've seen with
Sure.
other, financial regulation around crypto. So it's like one of those things that's going to come, at some point, but isn't here today. But we
Yeah.
definitely have, we also work with a bunch of great service providers that know the space really well. So we can always make referrals to tax advisors and things like that know crypto really well.
Yeah. I think one of the most important pieces from this aspect of the conversation when talking about crypto and the idea of partnering with Abra and some of the things you guys can do regarding SMAs is the fact of the matter is the commingling of assets got a lot of crypto investors, in trouble,
Mhm.
and people are going to go to jail. The industry is being cleaned up. We're seeing a lot more regulation, and the fact of the matter is the ability to not commingle assets is one of the reasons, why people have chosen SMAs and that approach for many, many years. That's also a big, big benefit with the vault approach that you guys have designed at
Mhm.
Abra. Is that not correct?
Yeah, I think so. I mean, I think it's more just the model that we've chosen, and
Yeah,
we do have a couple of pooled strategies, which we always disclose to customers,
sure.
and that's sometimes driven by the challenges of how complex those strategies are, and it would be very hard to do those one by one. But for most of the strategies, yeah, your assets are sitting in a vault or an account that are in your name, and obviously with the RIA model, it never comes onto the RIA's balance sheet, so it's completely segregated. That was the really big issue with a lot of these bankruptcies, is that your assets were a part of their balance sheet in their estate, and that's been very unfortunate for a lot of those clients. We still get a lot of people coming to us that were holding their assets at Celsius or at some of these other companies, and they've just now started to get some of their assets back. It's great because they're very educated now on what models are better for them, and they ask a lot of really good questions. So I think it's very encouraging to see that it was a painful lesson for a lot of them, but I think that they have learned. And I think the industry has learned, right? Like the industry is much more savvy and battle tested as a result.
Yeah, no question. Let's talk about you have a legal background, you have an asset management background, and made the decision. It's been a couple of years now. When you're on the front lines of the industry, like you are, and you're building the organization, and you're getting out and having the conversations with clients, and partnerships and other vendors and service providers, and really establishing the business from the ground up. Can you talk a little bit about how you have found it most effective to communicate with the family offices and the trust companies? Again, I made this comment earlier about the stay wealthy, the stay rich, and not wanting to put the client's assets or put the family's assets at risk by making the wrong decision in terms of partnering. When you're on the front lines of a growing, maturing industry, how is your organization and you as its leader on the Abra Private side, how are you building that confidence? And what are the things that you're talking to these clients about? Because a lot of skeptics would look at the industry and just say it's just not regulated yet. There's just not
Mhm.
enough regulation, and
Yep.
regulation is coming, but until it's fully regulated, and say what you will about these new ETFs, like they just aren't comfortable. How do
Mhm.
you just have that conversation about where the industry is and why they should be thinking about working with y'all?
Yeah, I think a couple things. One is that obviously the fact that Larry Fink has been a very big champion, at least this year, of the industry and the asset class in general, at least with Bitcoin and now with Ethereum, that's been huge for the industry. Some people would say, oh, it's negative that this is becoming very institutional. Some of the kind of crypto OGs feel that
Yeah,
way, but I think it's
the
very
native,
positive.
right? Yeah,
Because he's basically, it's like the biggest asset manager in the world. They're doing
yeah.
tons of marketing. He has a ton of credibility with those types of investors. He knows how to speak their language, and they're spending a ton of money marketing these products. So they are basically on the front lines, and everyone else is kind of drafting off of them. That's how I view it.
Yeah.
It's
Yeah.
very, very positive in terms of legitimizing this asset class. I think the fact that the Ethereum ETF was approved
Yeah.
is, I mean, whether people buy Ethereum or not, the fact that we now know that it's not a security in the SEC's eyes is huge, because that was one of the regulatory overhangs that we had, where people just weren't sure, are they going to come out and say this is a security? That would have
Hmm.
been a big problem for a lot of people, and they wouldn't really want to hold Ethereum. So I think in general, just the kind of the tailwinds that are coming off the ETF approvals are going to help a lot. I've noticed already they really help our conversations, but I do think you're right that like they're more focused on kind of wealth preservation, at least people who are coming into this asset class and don't have exposure and they're already wealthy. So it is more about convincing them to just put a small allocation. And we always kind of recommend like, 0.5%, 1%, like just get initial exposure, and to put it in that bucket of like, some of them think of it more in their venture capital or private equity bucket, where it's kind of a high risk reward type of asset. And that seems to usually work, I think, especially when you model out kind of the fact that Bitcoin's uncorrelated, Ethereum's uncorrelated with the other assets they hold. That's usually pretty attractive when they look at the portfolio level. And I think just, again, there's a lot of really interesting kind of, there's a lot of interesting potential in Bitcoin and what it's going to become, whether it's, an inflation hedge, whether it's a geopolitical hedge, whether it's a store of value. I think people will argue about that and say it's not today, but I think people are investing kind of in the potential of what it's going to be in, 5 to 10 years. So I think it's, it's definitely coming along. We are seeing tons of demand on the private client side, almost more than we can keep up with right now. So I think part of it is this, the ETF approvals and the fact that this is becoming kind of more widely accepted, which is definitely making our job easier.
Well, one thing that we have seen is the recognition by the asset management community, call it, that for a long time, it was looked at that institutions, right, family offices, endowments, foundations, and sovereigns and pensions is where you're going to get your alternative allocation. Mm-hmm. Over the last 5 years, there's been a tremendous investment by the alternative asset management community into recognition that actually the mass affluent, the high net worth, ultra high net worth customer base in the US is quite significant. Yeah. And you have trillions of dollars in retirement accounts. Mm-hmm. And these are folks that largely, when you look at the data, don't have a lot of exposure to alternatives.
That's right.
And I just recorded a show with a financials hedge fund yesterday, and we were talking about one of the biggest themes in his portfolio, and it's wealth management. Mm-hmm. And the reason is because we've had, by and large, over the last 20 years, a tremendous wealth creating mechanism in the equity market. And these are folks that are not diversified. And so if you're a private equity or a multi-asset manager, and you can get 1, 2, 3, 4% of those assets, that's hundreds of billions of dollars in capital flows into the organization that are quite sticky. Now, I'm curious, when you think about that macro kind of backdrop and your organization, the other thing is servicing that market is very difficult. Mm-hmm. Because you're doing a lot of educating. Yeah. You're having to talk one-on-one to a group of advisors or a home office. How does Abra think about the team building piece to cover the market, to recognize the opportunity?
Yeah, I think that's a really good point. I mean, I think about a lot of our clients are kind of the types that, people have always sought out, venture capital returns, private equity returns, but that is kind of a limited group of investor types that can invest in those types of deals where, even if you're an accredited investor, most people don't have access to the best PE and VC managers. So they're kind of left with the stock market, housing, like things like that they can invest in. And I think crypto offers a really interesting alternative where you can get kind of those venture level returns. It's, the most crypto firms, Bitcoin, Ethereum, those types of assets are all outperforming that asset class majorly. So I think that's why you see a lot of the, I call that retail. It's like kind of the retail interest, because this is their chance to kind of get a piece of that. And
they don't have a lot of, like I said, they don't have a lot of other options. I mean,
they don't have a lot of other options.
There and it is a decentralized asset class in a sense that grew up and is still growing up on Twitter and on other platforms, Discord and others. And they feel like this is their chance to kind of be a part of what was the internet, before, many of them were alive or even just able to participate. So it does have that, like you said, decentralized notion to it, and that the masses can participate.
Exactly.
But it also creates a lot of challenges as you're thinking about building an organization to figure out you only have so many hours in a day. There's only so many of you. And there's a lot of people that want that education and want your time. So you have to think about how to do it.
Absolutely. I mean, I think the thing that's really worked for us, we've had a few partnerships with some organizations that kind of already have an ultra high net worth audience. And, some of them are like these conferences that are kind of providing thought leadership, and these people pay like hundreds of thousands per year to be a part of this community. We've gone to partners like that, partnered with them. We go and speak and kind of do the education piece. We've gotten tons of clients from things like that, especially because there's not a ton of competition right now. And, it's pretty, you do have to be out there, but you can kind of distinguish yourselves. There's several firms, especially now, a lot of the industry collapsed over the last couple of years and didn't make it. So I also see that some of those firms we were competing against, and which made it more difficult because we had to spend more, in marketing dollars, is now it's a lot easier because they kind of see, oh, you've been around for a couple of years, you didn't die, you still have, you're still out there. And I think that's a really positive thing behind us. So I'm not saying it's super easy, but I think when you're in an industry that's growing really fast and you're one of several early companies, it does make it a little easier. And like I said, I think the product suite that we offer is resonating very, strongly with these potential clients. So like I said, we have tons of inbounds, almost so many inbounds. We don't have time to do outbounds right now. So we are looking at growing our team. And, a lot of the types of people we look for are, people who've done wealth management at banks. Obviously, they really understand this client base. As long as they have a little bit of kind of basic crypto knowledge, we can usually work with that. And then we've also been looking at kind of who else has been in this industry serving institutional and private clients that we could maybe take from some of our competitors. There's been a little bit of reshuffling in the industry. So there's always those, those types of people. But I do think we're going to grow our team a lot in the next, I think 6 months to a year, kind of through 2025, I think is going to be a really, hopefully a real bull market for us.
Yeah. I mean, I think that there's such a tremendous shortage of, frankly, just knowledge. There's a lot of promotion. And that's one of the challenges about our industry. I say IR, like investing in asset management at large. When you get into crypto, you really have to know who you're talking to and what their agenda is. And so it really matters, I think, who you put out there representing your organization, because like you said, it's going to take the right type of advisor, the right type of family office and trust to even want to go and start to do 1%, 2%. And so they're going to have to feel very comfortable, very confident, and feel like they're in good hands with a trusted, established firm. And the tip of the spear is always going to be that relationship, business development kind of sales professional that's out there opening the door for the portfolio strategist and the investment team to kind of come in and talk and sort of educate about what we are doing, in terms of your capital. So
absolutely. And it takes a lot of education. I think, for many people, these are ideas that are, kind of paradigm shifts in the way we think about the world and the way we think about, the financial system, centralization to decentralization, private money. Like these are things that people haven't thought a lot about. So you kind of have to do it over time. It's not like you come in one day and you're like, oh, I get it initially. Let's make an allocation. Like that's just not how this industry works. So you're right. It is a lot of education and slow.
Well, we've said that, but it does pay off. And that's the other thing, is that this is a very sticky retail. I call it private wealth, has a reputation in alternative circles for being, sometimes not as sticky as institutional capital. But I think the investor base you're going after, the client base you're cultivating, is a more sophisticated, larger client base anyway. And I think that those are folks that see themselves as astute, see themselves as doing due diligence, see themselves as selecting the best of the best providers. And so, those are folks that are probably going to be more in it for the long haul. And it's probably a wise choice from my standpoint. If I had a vote, I want to ask you a couple of wrap up questions. This is a fast moving industry. You're providing a ton of education. First and foremost, how can people learn more about Abra Private and some of the solutions and capabilities that you offer within that line of business? And then just more broadly, your team and some of the things that you're getting out there. You talked about some of the conferences you're at, and you're speaking on podcasts, gratefully now. But how can they learn more about your unit, your team?
Yeah, so Abra.com is our website. We're actually in the process of building out our new website that kind of goes a little bit more into the different, Abra Private and Abra Prime and how they're different and which services and products we offer. So we are in the process of building that out. But there's some basic information. There's contact forms there if people want to get in touch. We're also going to be speaking at the Vision Conference it's coming up in June. If anyone's going to be there, obviously come say hello.
Yeah.
We're a lot of the crypto conferences. Consensus is also coming up
That's right.
next week. We'll be there speaking as well. So we're at most of the crypto conferences and a lot of the kind of allocator conferences where there's crypto. So there's like iConnections, like all of these types of conferences. We're almost always there. So always come say hello, and we're happy to set up time to educate. We'll also be adding more kind of educational content to the website over time, because I think that's going to be really important. And we're going to do some webinars, and, we're always happy to kind of do those as well, because as you said, education is the most important thing.
Yeah, it's crucial. I mean, I think Consensus, I went last year, and I think this year is going to be a totally different conversation, right? Like with the two ETFs, and you have advisors that are trying, they're trying to court more advisors to attend, and we were one of the few that were there last year. So I really think the industry is recognizing that to truly see the organizations take that next step in terms of growth in assets and growth in client, you have to work with the BlackRocks. You have to work with the big advisors and the big family offices. Whether the crypto OG community likes that or not, it's just a sign. The horse is out of the barn. I want to ask you one last question, Marissa. As we've been through as an industry with crypto and digital assets so much. You talked about cycles. There's been 6 or 7 probably, really since the original Bitcoin paper came out. When you look at where we are at now, and you look at where, you've put a stake in the ground and building Abra Private to serve family offices and this super sophisticated, bigger client base, when you look at the backdrop of the cycle, are you more excited about where we're at right now? Or when you look in your kind of crystal ball and say in 2 years, 3 years, when we have regulation, that's when we're really going to see this thing take off like a rocket ship? I'm just curious how you view it.
Yeah, I think a couple of things. One is that I think the fundamentals and the kind of the infrastructure of the industry is improving steadily, whether there's a lot of attention on the industry or not. So during the bear markets, actually more gets built. And that's one thing that people, they only pay attention to the industry every couple of years, but there's these kind of step function shifts in where we are as an industry. So I'm excited to see where we are today. But I do think regulation is one piece that has a lot of investors sidelined and completely fair, like I think if you're deep in the industry, you can kind of read the tea leaves. I have my own personal feelings about where we're going to go, which makes me more comfortable, but I can understand from an outsider's point of view, they're like, we don't know, this is not clear. We don't know what's going to happen. And they want to wait until, that's a little bit more firm in order to allocate capital. And I think that's very fair. But I think until then, there's going to be a lot of opportunities to invest early before that's all clear. And a lot of the returns will hopefully be there. So I think there's benefits to getting in now, and there's benefits to, waiting and getting on more